Hi girls, so we'll move on to the next kind of a problem in chapter 14. So this is to do with the utilization of the input tax credit when it is an intrastate supply of goods and services. Okay, so we'll see two problems on this and then we'll go ahead with the next topic. Okay, so in the meanwhile, in my previous video I have solved for you illustration number 16, isn't it? So now illustration number 17, 18 and 19 are similar problems like what I've done previously, so you all can just work it out yourself. So that will be homework problems for you. Okay, so now I'm moving on to the next kind of problems, and that is utilization of ITC when it is intra-state supply of goods and services. Okay, so you're not given much of detailing in this kind of a problem, though it is the same procedure of calculating your net GST. So wherein you'll have to calculate the total tax liability, that is the output tax liability, and then from that you have to reduce the input tax. So it's the same format as such, but then probably the detailing given here is little bit slightly different, and also you have to be calculating this for the two companies which are involved in the trade transactions. Okay, so let's see the first illustration so that you will be able to understand it much clearly. So you can see illustration number 20, which is there on page number 172. So let me read the question for you. So Messrs. Usha Limited of Bengaluru, having registered business premises, makes supply of goods worth rupees 15 lakhs to Messrs. Saha Limited, which has also registered business in Mysuru. Further, Messrs. Saha Limited sells goods to its customers in Magaluru for 18 lakhs. Compute the tax liability under GST if GST rate is 18%. So you can see that this is all within the state, girls. Bengaluru, Mysuru, and then Magaluru. All this is another place also in Karnataka. So all this I am just expecting this state to, this particular place to be Bangalore. I'm not sure though, but all of this is in Karnataka. Okay, so it is an intrastate supply. So as I told you, you have to calculate the tax liability. Okay, the tax for both whichever companies are involved, that is Usha as well as Messrs. Saha. So the two companies involved here. So let's see. Messrs. Usha Limited in Bengaluru, having registered business premises, makes a supply of goods worth rupees 15 lakhs. So firstly, in the particulars column, it will be transaction value. So we are having two columns, one for Messrs. Usha, another company involved is Messrs. Saha. So another one for Saha. Okay. So here, first we will see what is the transaction value. It's already given for you in the problem, not to worry. So transaction value is nothing but 15 lakhs for Usha, and Saha has sold, you can see here, Saha Limited, the goods of its customers in Mangalore for 18 lakhs. So the sales is 18 lakhs. So this is your total transaction value of sale that you have made. Now we have to calculate the output tax liability. So the total tax liability on the sales that which is made will be also given that the GST percentage will be 18%. So we have to divide that 18% between SGST and CGST. So CGST at 9% and SGST at 9%. So this amount will be calculated on this 15 lakh. 15 lakh into 9% will give you 1,35,000. Again the same 15 lakh into 9% will give you 1,35,000. Now coming to Saha Limited. Saha Limited again is 9%, same made mention in the problem. So 18 lakh into 9% will be 1,62,000, and again for SGST also it's 9%, 1,62,000, which is calculated on 18 lakhs. So that's your input tax calculation. Okay, so now your output tax calculation. So now we will reduce the input tax calculation from that. So input tax calculation is calculated based on the purchases that which is made, isn't it? So output tax liability is calculated on the sales. Input tax credit is calculated on the basis of the purchases. So now if you see, it is told that Messrs. Usha of Limited of Bengaluru has sold the goods to of rupees 15 lakhs to Saha. Okay, so that means how much has Saha Limited purchased the goods for? It is 15 lakhs. But there is nothing as such which is made a mention for Usha Limited, because this particular Saha company has not sold it to Usha, rather it is sold it to somebody else, isn't it? So therefore it doesn't become the purchases of Usha. So we are unaware of the what is the purchases that which is made by Usha Limited. Okay, so therefore there is no input tax credit for Usha Limited, but we are only aware of the purchases that which is made by Saha, and that is almost 15 lakhs. So therefore we have to calculate the input tax credit only for Usha Limited. So for Usha Limited, sorry, for Saha Limited. For Saha Limited it is 15 lakhs into 9%, and that will be 1,35,000. Again 15 lakhs into 9%, and that's 1,35,000. Okay, so now we have arrived with the input tax credits.